You're watching Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, Marx from FNB Wealth and Investments, David Shapiro from Sasfin Securities. Remember, send your questions through via email, stockwatch@bdtv.co.za, SMS 41392, or on Twitter at Business Day TV using hashtag Stockwatch. David, Chantal, appreciate the time. David, let's start with you. I was having a look at markets. Of course, the US was closed Monday. They went roaring off yesterday. Locally, we're pretty much at all-time highs. The US is just off all-time highs. This is a bull market, notwithstanding all the horrors out there. I mean, we should almost just turn the news off and buy stuff.
Yeah, absolutely. You know what the market's telling you? It just says that they've largely factored in the impact of Trump's, tariff and fiscal policies. We're going to get more volatility. We're going to get a lot more, ups and downs and that. But I think generally the market's saying, look, overall consequences of tariffs and other issues are going to be limited. And also all this talk about, the US economy falling in a heap, I think that's overstated as well. I don't think we're going to see that. So I'm becoming very bullish. And I think the underlying economy, as we saw yesterday with the switch in consumer confidence, is moving in the right direction. I think second half of the year, September, rate cuts, I think that's when we'll really start partying. But, prepare for it. So I'm very bullish at the moment.
Chantal, I mean, even locally, and all the worries around lack of growth and high interest rates, and so the list goes on. Yet here we are, all-time highs, driven a lot by the goldies. But hey, the banks are almost at those levels as well.
Yes, I mean, the goldies really have helped us out, and it's really pushed us towards those record highs. I mean, if you look at the valuation of the rest of the JSE at the moment, it doesn't look expensive at all. And you still have it very undervalued relative to other major global markets. That said, as you mentioned, the banks have performed well. Retailers have recovered really nicely from their lows last year. And there really has been a thrust in terms of SA Inc. And I think in part because of the valuation story, and then also because these companies have actually delivered, and they've delivered well in very, very trying economic conditions. So, I mean, that speaks to the quality of some of these major companies that are listed on the JSE.
Yeah, imagine what they could do in 3% GDP and real interest rates. That would be awesome. Chantal, let's stay with you for a moment. Anglo Platinum, question coming through around that. This is the last week as Anglo Platinum, then it changes to a name that escapes me, awkward. And of course, you're going to get a whole lot of shares hitting the market from Anglo shareholders. What's the thinking here? Do we get out of Anglo Platinum? Do we hold it? What are you thinking around this demerger process in terms of Anglo shareholders when I get a whole lot of Anglo Platinum shares as well?
So, yeah, you'll get Valterra Platinum shares, whatever that means. So you'll get Valterra Platinum shares. And the question is whether or not you are a platinum bull, or whether or not you're a platinum bull, right? So the bull case for platinum going forward is that market is in deficit. Over the next few years, you will probably see a sustained demand recovery because automotive producers have stockpiled PGMs and have now largely cleared those inventories. And the expectation is that hybrid vehicles will continue to grow very strongly where platinum loadings are very high. So that's the bull case. The bear case is that we'll see a wholesale shift to electric vehicles, and you'll see a sustained reduction in demand for PGMs, especially in the absence of a meaningful kind of large-scale adoption of these hydrogen vehicles and so forth. So it's difficult to say. I think near term there is probably more support for PGMs than not. So I actually have a good feeling about the platinum price at the moment. It just feels to me like the current bump up that we've seen can be sustained for a little while longer. So perhaps the short answer is I won't sell it yet.
Yeah, Valterra Platinum, code is VAL. David, you're not a big fan of platinum?
What is the code? I can't find it anymore. It's gone.
It's gone. It's now VAL.
Oh, there you are. You've got to change. The worst thing is that they've got to give you warning because you've got to change all your spreadsheets. You've got to change everything. just so disruptive, you know.
So
I hope they keep the old chart price, the old charts.
Well,
They
I'm
don't
seeing,
change that as well.
yeah, I'm seeing the whole chart, which, to your point, sometimes we lose that data, but I'm seeing the whole chart.
Okay.
Not the prettiest chart ever.
VAL.
I mean, would you be holding VAL? Would you be holding on to them? Do you even hold Anglo?
I'm with Chantal. Yeah, I just think that the current movement and the price movement that we're seeing is pointing, I think, towards upside. I think this is going to be a much, a broad bull market that's going to embrace not only, the Magnificent Six or seven in the US, but I think it's going to go a lot further. And I'm very encouraged by what we're seeing in some of the mining markets. I know oil prices, though, low. We can keep it low. That's fine. That's keeps inflation down. But yeah, the price movement and some of these, just the breakouts that we're seeing, I think encouraging. I wouldn't be a seller. Don't go short.
Okay.
If that's the opposite.
Okay. So we hang on to our Volterras. Code David VAL. Go update those spreadsheets after the show, not right now. A couple of questions coming through, broadly the same. One's around rhodium. I got the rhodium ETF. I did spectacularly well. Sold some, held some. The bit I hold not doing so good. Does this fit into the same place, David? If we're liking platinum and palladium, surely we're liking rhodium.
Yeah, I'm a bit nervous to go single commodity like rhodium. I can hardly spell it, let alone know where it's going to go. And these things can be very erratic in their performance. I'm not that bold, but and I don't know enough about the demand. But I mean, you pull it all up at the same time. You go dig a ton of this rock out, and lots of other metals come out. Which one's going to blow out? I don't know. Remember, a couple of years ago, it was actually palladium where it hit 3,000 while platinum was 1,000. Palladium's back at 1,000. Platinum's still at 1,000.
Yeah, I mean, I think rhodium peaked at about 30,000. Chantal, a single commodity ETF for you?
Well, I think if I'm going to look at single commodity ETFs, I think gold will probably be the one that I'll own. I'll probably not buy it right now, but it's because gold is almost an asset class on its own, right? I think in terms of single commodity ETFs, it's very, very difficult to time those markets perfectly. Rhodium, I think, has the added complication of being quite an illiquid market. So I think from a pricing perspective, you can see it move all over the show. That said, I think a rising tide lifts all ships, and probably not the time to sell your rhodium exposure right now. But yeah, I mean, I actually just prefer something a little bit more diversified.
Well, then my next question kind of fits into that, which is around copper, but advisable to purchase a copper ETN, there's the Standard Bank one and the JSE, or rather shares in copper miners. Chantal, I mean, the point there is, I mean, we don't have pure copper miners. Well, we got copper 360 on the market, but like an Anglo or maybe a Glencore, they do give you operational leverage, but they're not exclusively copper. Harmony one day soon as well.
Yeah, absolutely. So if you have a specific view on one of these single commodities, right? If you've got a specific view that copper is going to go to the moon, then an ETF like this is a really great way of building that exposure. But your risk, again, is quite elevated when you're exposed to a single commodity. I mean, when we're talking about stocks, we always highlight these single commodity stocks as being very, very risky because it's just that one price that kind of determines the direction of the company. And it's very similar to a single commodity ETF. So my preference would be to look at one of the better kind of capital allocators in the market with big copper exposure, but with diversification elsewhere also. So, I mean, in that case, it would be something like a BHP. Even in Anglos, I think, with all the actions that's going on around the demerger and that activity, could still provide a much safer spot for building that copper exposure.
Yeah, and the Anglo demerger, last day to trade is Friday. So if you want them, own them on Friday. If you don't want them, buy them on Monday. David, copper for you?
Well, we've been talking copper up for a long time.
I know, it goes nowhere.
Waiting for it to happen. Copper hasn't hit that 10,000 mark, which to me decides whether we go in or not. But I think it's going to happen. You know what I mean? There's a feeling that it's building up towards something. I like the Harmony deal. Everybody criticizes Harmony, but mining's a wasting asset. You've got to replace your ore body somehow. And if they can't find the gold assets, rather get a good copper mine than a bad gold mine. So they're generating the cash, you know, and they're not the only people. You know, whoever you talk to, BHP are trying to get copper assets. So there must be something that they know that we don't know. And I'm quite happy to go with the way that, you know, BHP are positioning themselves, Anglo positioning themselves, and now Harmony. So I think they know a lot more about digging than I do.
Yep.
So obviously there's something there. Yeah.
And I
don't know about our old copper mines. I don't know. You know, the Brieskas and the and the copper 360s. I don't know what it is about South Africa, but we just can't produce the stuff at a decent kind of margin and profitability.
Yep.
I know you long of 360, or you still long of 360.
No, I've never held 360. Copper 360.
Yeah.
Come on, share code CPR. The share code worries me. We need to go to break quickly before break, David. Tiger Brands results, market loving it, good numbers, and heck, a special dividend to boot.
Brilliant. You know what happens? Credit to Charles Kruger. He's actually broken down this whole business. I know it because I used to do the audit there, and that was a long time ago where we used to count the peanuts. But it's credit, you know, when you go through these numbers, it's really now starting to point in the right direction as a fast-moving consumer goods company. You know, it's a new highs. It's doing very, very well. I just, you know, back chart. I think a good number, and the market's up, 4, 5, 6% today.
Yeah, no, market liking it. Chantal, Tiger Brands, terribly boring for a long time, but new CEO and suddenly exciting.
Yeah, if you told me in the middle of that Dangote flour mill debacle that in 2025 Tiger Brands was going to pay a special dividend, I would have said that you were smoking your socks. So they've really done good work, as David also mentioned. I mean, credit to Chart here. I mean, I think that he's just done a phenomenal job of breaking down that business, simplifying it, focusing on the right stuff. Again, another thing, if you would have told me 5 years ago that Tiger Brands would stop saying that it's a premium good and start focusing on being price competitive, I would have also not believed you. So I like the moves that they're making. I like that they're simplifying the portfolio. No more super seasoned Odos flavor. Like just simplify it. Just focus on what the business does best.
I agree with all your points. And my lesson is, in the Gate, when the richest man in Africa has something to sell you, run away, because he didn't get to the richest man or nothing. David, Nvidia results out tonight. Do you stay up late for these or make a little party and all?
Yeah, this is my number one business. And he's the new head prefect, Trump's new head prefect, Jensen Wang. You know, and I love what he says. Look, I can't give you the results because, you know, sometimes the expectations are so lofty that it's almost impossible for any business to meet what analysts think. But I think if you plot forward, you know, 2, 3, 4 years where the rollout of these data centers and the whole rollout of AI, the infrastructure side, they're incredibly well placed. And I don't think any of the competitors kind of, you know, match where they are. So I hope they're good numbers and the market responds. The market wants to respond positively to it. I still think it's a buy at these levels, you know, with what lies ahead. So I love the business. I like Jensen. I prefer him in the leather coat than his tie that he wears with Trump. So I like him, you know, like that.
He didn't look comfortable in that tie.
Jobs role. You know.
Yeah, he didn't look comfortable in the tie. Chantal, are you an Nvidia convert? I must say, I was late to the party, but what's your thoughts on Nvidia?
Yes, I mean, I still like the company. I mean, if you just consider the sheer size of it and the ability to still grow revenue at, well, the expectation for this reporting period is 60% year on year. For the full year, the expectation is that they're going to grow revenue by 55% a year. That's to almost 200 billion US dollars. I mean, that is absolutely staggering. So I think that the demand prospect is still there. The room for growth is still there. I think the thing that the market is going to focus on today is going to be some of these kind of Trump proclamations and regulations that have been put in place in terms of exporting some of their kind of lesser advanced chips to the Chinese market, the inventory write-down that followed that announcement, the site reprieve that they got in other areas. I think we need policy certainty around Nvidia's product specifically before you'll see that stock kind of rally very meaningfully again. But yeah, I still like it from a longer term perspective. And yeah, you would have had a really good entry point on the 9th of April.
Oof, yes, yes. And it's also, I mean, to your point around certainty, they made the H20 chip to get around, to be clear, Biden's restrictions on chips to China. And then Biden put new restrictions, and now the H20 is also not applicable. Chantal, let's stay with you a moment. Question coming through around Purple Group. Two of them. One is just saying, should I be buying? The other is, surely with all these highs in the markets, it's a good investment. Is Purple one you watch, one you have thoughts on?
Yes, I mean, I don't track Purple Group too closely, but I do have thoughts on the stockbroking model. So margins are quite thin and it's very volume dependent. So when you do get higher volumes in the market and high volatility, these companies do tend to do well because they get brokerage on every single trade that is put into the market. But the converse is true. When you see kind of a lack of volumes or you see markets move down, then generally they don't perform well. The market at record highs could be supportive just because you have some stocks that have done very well, and if people are selling those stocks, then the brokerage will be slightly higher. But I don't think that it's going to have a major impact on profitability. What I would say, though, is that they do have an exceptional product in easy equities, and adoption by consumers have been very strong. And I would expect that to persist in the absence of any kind of meaningful competitor that kind of works in the same way.
David, I heard you chuckle there.
You know what I like about easy equities is that they've done more for share ownership than the stock exchange.
Yes.
And I like that. That they. In seriousness, in terms of the private client and the smaller investor, that they make it available, that they allow them to buy even proportion of shares, I think is very good. So, and they do that, and I think they perform a very, very good function. Whether they're making money or not, I don't know. I don't know how big the volumes are, they need to be for them to actually break even. But I like their offering.
So, David, here I'm going to really test your depth of range on the JSE. A question around Finbond. Is this a good-looking investment?
Somewhere in my crystal challenge, someone chooses Finbond, and I'm never quite sure what they do and why they would choose it. So I have absolutely no knowledge of the company at all.
Market cap just over 400 million as a short-term lender, as I recall. Last time I had a look. Chantal, do you have any deeper insight into Finbond?
I have even less insight into Finbond, unfortunately. It's one of those companies that you always hear about and people ask questions about it, but you kind of always put it on the back burner. But perhaps this question will kind of force me into action, Simon, maybe next time.
Yeah, I got to say, I remember many years ago, maybe a decade ago, they were doing short-term loans, but those loans were so short-term that they could turn their loan book 6 to 8 times a year. It was astounding to watch. But since then, they've come under a whole lot of pressure, and I haven't kept up enough with them. Chantal, here's one that you certainly know. Question coming through. Is Pan-African a good entry to be buying when looking for a gold miner?
So, Pan-African would be my preferred gold miner at the moment. I think if you look at Pan-African's performance since the start of the gold bull run, I kind of pinned that at the day that Russia invaded Ukraine. It's been a major underperformer. During that period, they've actually invested quite heavily in capacity that is now online. And they also had a hedging strategy that worked against them because of the spectacular rally that we saw in the gold price. And that hedging program came to an end in February. So this means the company is producing more gold at very high prices, which in my mind translates into very strong profit growth, at least for this year, and as long as the gold price remains high. So I think it's a play on the gold price. The gold price doesn't have to go up by much for Pan-African to do very well financially. It just has to kind of stay at these elevated levels for a while. So yeah, it's definitely my preferred pick. I'm not sure if now's the time to get into gold. It does feel yes, it's almost like the feeling I have about platinum and the feeling that Dave has about copper. I have like a feeling about gold at the moment, but don't take my word for it.
Yeah, but I'd forgotten about that hedge. I spoke to Kobus Lutz when they had results, and with that hedge gone, I think it's 30 or 50 million a month that just suddenly they get in their bank balance because of no hedge. David, gold miner for you?
I still think there's a little bit more left. I'm inclined to kind of switch out a bit and feel that their run is going to come to an end. But there's still a very strong sell America movement, you know, and that might not have that's for whatever reason. I think it's short term, but there's certainly nations who don't want to be exposed to American assets. I've just been watching the Asian ASEAN conferences where one of the big themes is sell America, you know, where investors in Southeast Asia and those nations are looking to move out of American assets, get rid of their bonds and look for other, you know, either going into other currencies or into other kinds of assets. And I think gold stands out there as well. So you can expect demand to stay where it is. But I think longer term, I think we've probably seen the height, or, you know, the best in gold shares and in gold.
David, staying with you, Karooooo with all the O's, I think it's 5 of them. Question coming through. I've held this since pre-NASDAQ listing. It's finally doing great. Do I hang on or perhaps take some profits? Would you hold on to Karooooo?
You know, I looked at Karooooo, and I've looked at the other one at Altron's results as well. You know, we tend to forget that they're also in the same kind of business. And you realize that most of the business comes from South Africa because you don't buy a motor car without a tracker, you know, or you don't have a lorry without a tracker, simply because the risks are so high of it being hijacked or taken away, and insurers won't insure you unless you've got a tracker. So I think they're in a very kind of healthy position, and you know, that will ensure that they keep selling what they do. And also they're developing a lot of you know, issues around tracking your drivers and understanding your you know, understanding what you're owning. But I think down the line, I would expect motor manufacturers to make this just standard in any kind of
fair point.
car that you buy. But for the meantime, they're in the sweet spot.
Yeah,
they're doing okay outside of South Africa. You know, I don't think there's any great breakthrough in Singapore and all the other areas. But listen, he's surprised us on the upside.
Yeah, no, he's done a great job. And for the record,
Karooooo with 5 O's or 6 O's?
5 O's. 5 O's. And the one time you don't need a tracker, when you get a Roadster Coupe, they're like, nah, no one's going to steal it. You're going to crash it. 10 years on, I haven't crashed it. Haha. Chantal, we need to go to stock picks. You're going with Pepkor.
Yes, so we had results yesterday from Pepkor that were absolutely fantastic, and it showed real intent from management in terms of what the strategy is going forward. You had excellent top-line growth in Pep and in Ackermans, as well as the other kind of smaller businesses in that stable, and it really was driven by the introduction of credit internally from their fintech business, where they have all the data management and all the information available to do so responsibly. Credit penetration in the likes of Pep and Ackermans is still very, very low, and I see a thrust into those businesses that will really, really push top-line growth to the next level over the next few years. The second thing is the fintech business generally performing very well. The push into cellular telephones and all the rest of it also kind of sustaining that business going forward. They've managed to improve margins. I see more scope for margin gains from them. And yeah, just an overall really solid result, trading on a 15 times forward PE. I think relative to the rest of the sector, it will look expensive, but I think growth is going to be absolutely way ahead of the rest of the guys. Yeah,
they got that flash business is huge, and I take your point. Credit is going to be massive, and they probably will do it very, very well. David, ASML, the little Dutch company that makes, well, without them we don't have anything. There's no Nvidia, there's nothing.
They make big machines, really, really big machines. But they're unique. They're an absolute monopoly. I know that there's some competitors that people talk about. But I mean, if with the demand for semiconductors just going to blow out over the next couple of years, they're in a super position. And I think competition's a long way away. I know we're always looking for it. There's nothing in China. So I think, yeah, they're conservative. They've been held back quite a bit, because of the issues with Trump and restrictions placed on them. But I think it's a good time to get in now. So let's watch Nvidia's results. Let's watch what Nvidia says. But I think one of the beneficiaries of this growth is going to be ASML.
Yeah, and the ultraviolet lit lithograph, which does the 3 nanometer, I don't understand what any of that means, but I understand that they're the only ones who do it. But we'll leave it there. That's all for Stockwatch today.
Look at their cash book, that's all. Don't look at the technology. Look at the cash book,
We understand cash. That's all for Stockwatch today. Thanks to my guests, Chantal Marx, FNB Wealth and Investments, going with Pepcore, David Shapiro, Sasfin Securities, going with ASML. Up next, the close. Stay watching.